Hello everyone, my name is Kanika Jindal. I'm assistant professor in the Department of Management and Commerce and I am teaching you banking and insurance. So let's start. So in today's lecture video, I'll be explaining you the meaning of financial system, types of financial systems, overview of Indian financial system and the components of financial system. So we'll be discussing on each of these topics one by one in detail. So let us now understand what is the meaning of financial system. A financial system is one of the important system or aspect of the economic development of a country. This system manages the flow of funds between the people of the country and the ones who may invest it wisely. That can be investors, businesses, anyone, for the betterment of both the parties. So, financial system is basically a set of institutions such as banks, insurance, stock exchanges that permit the exchange of funds. Financial system exists on firm level, regional level or even global levels. There are borrowers, lenders and investors which exchange current funds to finance projects either for consumption or for productive investments. The services that are provided to a person by the various financial institutions including banks, insurance companies, pension funds, etc. are all included in the financial system and they together constitute the financial system. A financial system also includes the sets of rules and practices that borrowers and lenders use to decide which product or which project gets financed, who finances the project and what are the terms of financial deals. So this whole set of system in which we are dealing with the finance, funds is known as the financial system of a country. So now as you can see on the slide, financial system is of two types. First is the formal financial system and the second is the informal financial system. In developing countries, formal and informal system coexist. That there is a formal system also and an informal system. And the process, this whole process of existing both formal and informal financial system is known as financial dualism, which is followed in developing countries. So financial system which is divided into two parts, that is formal and informal. So let us discuss what is a formal financial system and what is an informal financial system. So in formal financial system, there is a regulated and organized structure. There is a proper system which is followed in a proper sequence. For example, banks. Banks are included in a formal financial structure. So if you want to apply for a loan, you will follow a proper set of sequence in the bank and then the loan will be processed. Now in informal financial system is unregulated and unorganized. There is no proper sequence of or system to be followed. For example, the local lenders. Local lenders form the informal financial system of the country. So let us now discuss about Indian financial system. As we have already discussed that the financial system of a country is responsible to mobilize the savings or funds throughout the economy. The financial system is also responsible or aim at managing and governing the mechanism of production, distribution, exchange and holding of financial assets or instruments of all kinds. So here are some features of Indian financial system. First feature is it plays a vital role in the economic development of the country as it encourages both savings and investments. Second point it helps in mobilizing and allocating one's savings for a better productive use. Third point is It facilitates the expansion of financial institutions and markets. Fourth point is it plays a key role in capital formation. Fifth point is it helps form a link between the investor and the one saving. Also, it is also concerned with the provision of funds. So these are few features of Indian financial system. Now the Indian financial system is also divided in two categories. That is, first is organized and second is unorganized sector. So in organized sector, it is also known as the formal financial system, which comes under the purview of Ministry of Finance, RBI, SEBI and other regulatory bodies. It is an organized and regulated framework. The unorganized financial system includes individual money lenders, association of persons, local brokers, non-banking financial intermediaries. Non-banking financial intermediaries are basically the firms or the institutions which provide loans or performs the functions of a bank, but they don't have the banking license or they are not officially are permissible to operate as a bank. So this is how Indian financial system is divided into two categories. Let us now discuss the various components of the Indian financial system. The Indian financial system has four components: financial institutions, financial assets, financial services, and financial markets. So let us discuss all of these components in detail one by one. So the first component is financial institutions. Financial institutions act as a mediator or intermediary institution between the investor and the borrower. The investor's savings are mobilized either directly or indirectly through the financial markets. So the best example of a financial institution is a bank. People with surplus amounts of money make savings in their accounts and people in the need of money take loans. The bank acts as an intermediate between the two. So this is the role of financial institutions. Financial institutions are further divided into two types: banking institutions and non-banking institutions. So banking institutions include banks and other credit unions that collect money from the public against the interest provided on the deposits and lend that money to the ones in need. Non-banking institutions include insurance, mutual funds, and brokerage companies. They cannot ask for monetary deposits but can sell financial products to their customers. Second component of financial system is financial assets. So what are financial assets? Financial assets are basically the products or the instruments which are traded in the financial markets. Such products or such instruments are known as financial assets. Based on different requirements and needs of the credit seeker, the securities in the market also differ from each other. So here I have shown a list of few such instruments or products which are dealt in financial markets. First is call money. When a loan is guaranteed for one day and is repaid on a second day, it is called call money. Notice money. When a loan is guaranteed for more than a day and for less than 14 days, it is called notice money. Term money is when the maturity period of a security is beyond 14 days. And treasury bills is something, they are also known as T-bills. These are the government bonds or debt securities with a maturity of less than 1 year and are dealt in money markets. Certificate of deposit, it is a dematerialized form for funds deposited in a bank for a specified period of time. Commercial paper, it is an unsecured short-term debt instrument issued by corporations. So these are few of the financial assets which are dealt in financial markets. Third component of financial system are financial services. Services which are provided by asset management and liability management companies to the investors so that their money or funds are invested in a most efficient way so that they can have the maximum return possible are the financial services. Financial services in India include banking services, that is all small or big services provided by banks like granting a loan, depositing money, issue debit or credit cards, opening of accounts, etc. Insurance services, services like issuing of insurance, selling policies, insurance undertaking and brokerages, etc. Investment services, it mostly includes asset management services. Foreign exchange services, the exchange of currency, foreign exchange, etc. So the main aim of financial services is to assist a person with selling, borrowing or purchasing securities, allowing payments and settlement of lending and investing. Fourth and the last component of financial system is financial markets. So financial market is a place where buyers and sellers interact with each other and where basically financial instruments or financial securities are dealt. The various buyers and sellers participate in the trading of money, bonds, shares and other assets, and such a place, such a framework, such a setup is known as a financial market. Financial market is divided into two types. First is capital market and the other is money market. Capital market is basically aimed or designed for financing of long-term investment. Long-term investments are basically for a period of more than a year. And money market, which is dominated by government, banks and other large institutions. These are the type of market in which the securities are dealt which are of short term in nature, like the treasury bills, like the investments which have a life of less than a year. So these are all about all the components of the financial system. So that's all for today. I hope you have understood the concept. Thank you so much and have a nice day.